Hi there, it's Bartholomew Perez with
Juanita G.
Today's topic is about consumer debt. If we have debt, what, if any, is the correct order to pay that debt off?
Great question. I mean, if you would have asked me this question about 3 years ago, the answer would have been completely different.
Because the market changes.
Because the market is constantly changing. Spending habits are constantly changing. Sure. I mean, coming out of COVID, after all that free money, I mean, people are still having a hard time tying that around their budget, right? Mm-hmm. I mean, some people are still spending.
Yep. The buy now, pay later model doesn't really help either.
At all. Actually, it just came out this week that, 40% of the people are having a hard time struggling paying that off with that model.
Yeah, because their interest rates are like ridiculous.
Exactly. So I mean, you have great credit.
Thank you.
You do. Obviously, I'm your lender, so I know that. I know. But so let's say on one of your credit cards, like what is the highest interest rate that you're paying, like on the regular credit cards?
If I were to use it ever, it's 28%.
28%. I think I'm seeing as high as like 30%, 34%
right
now. I mean, and that may be for not so good credit, right?
Yeah.
Crazy.
But still, that's high, even if you have good credit. That's
yes.
No, don't use it.
I know, right? But hey, you know what? It's something about sliding that card, right?
It's just
leaving your cash in your account.
Right.
I mean,
yeah.
I don't know.
And I recently had a situation like that where I had debt from educational assistance program, and I was at a Forks Road where I wanted to take out a new credit card to be able to use that to pay that debt off, which I had the option to do. Before I did that, though, I called my expert and I asked Juanita, what should I do about this debt?
I have this large loan.
And I have, my plan and intention of buying another piece of real estate this year.
Right.
So I knew, okay, what am I going to do? Call my expert first, make a decision, even though I had options already in mind. I didn't have this idea also, but because I called Juanita, that was suggested, hey, check in with one of your credit cards because you have a few open and ask them if you can transfer a debt service from one card to another.
Yep.
What
happened?
A balance transfer. Very
at
important.
0 interest rate.
Even better.
For like 2 years sometimes.
Yes.
Yep.
That's exactly what I was looking for. That's exactly what I found. 0% loan of a transfer from a debt to this card. And why didn't I think about that? Because I didn't have the question to ask until I called Juanita.
and you're a genius. I mean, so you could have thought about that all on your own.
I could have figured it out.
But
I rather just ask the expert because the way you structure your debt service is critical.
Yes.
You may have excellent credit. You feel a urge to open up a new credit card, and you oftentimes don't have to.
And
right?
you can get it, right?
Yeah. I knew I was going to get the card easily.
But what you were also going to get was a credit increase.
Absolutely. And right now I have none,
right.
Which is, okay, going into my next purchase, I want to go into that with no debt service outside of what I'm going to incur. But because I asked the question, so I transferred over a huge amount, and then now it's taken care of. But that's the sort of answer I was looking for because, hey, the way you want to manage your assets, keep as much liquid as you can. Don't use your own money. Okay, 0% interest, phenomenal. You're not going to get that anywhere else.
No brainer. And so now going back to the question, how
paying off debt.
Paying off debt. Okay, so it depends, right?
Okay.
It depends if you're on a fixed income, if you just have, W-2 earnings, if you have a side hustle, it could be different for many people.
Sure.
So if we're talking about tackling down debt, and you don't own a house, let's just say, right? The only option is to, use money from paycheck.
Yes.
Well, start with the lowest card first.
Okay. The lowest balance.
Absolutely.
Okay.
Lowest balance first. Why? Because then you pay that one off, and then whatever you were paying on that, now you add to the next card. Okay. And then you add to the next card.
Okay.
So you start chipping them off at the bottom. Okay. And the goal is to not use it again. So take it out of your wallet so you don't use it again. Okay. Yeah. I don't suggest cutting it off because guess what? You're going to forget about it. Yes. And then 2 years later, they're going to deactivate it. And now you have a credit decrease in your scores.
That's right.
Okay. Use the card at least once a year, twice a year. Gas, gum, a latte. But yeah, that's one way. Now, if you are a homeowner, okay, if you're a homeowner and you're struggling with debt, and you have equity in your house, okay, there's something called a home equity line of credit. Means you can take a loan against your house, against the equity on your house, to be able to pay off debt, renovate a house, whatever the case may be, an emergency.
Sure.
But if you've got about $20,000 to $40,000 of credit hanging over your head every single month, I'm going to say it's probably difficult to see that principal go down.
Absolutely.
I see it time and time again. And I think some of the statements show, like, if you pay this in 5 years, this is how much you paid or something like that.
That's right. And that's what they want you to do because...
Minimum payment, right? Oh, I got it. Minimum payment. Yeah, that's where you're just paying the interest.
That's right.
So the reason I say a HELOC is a good option is because you can take a loan against the equity on your house, pay off all that debt that you're probably averaging about 30 to 35% on credit card debt, maybe paying out $1,000 a month between all the credit cards, right? Still not seeing any type of improvement in paying off your debt. You take out a HELOC against your house. Now you're roughly at about 10 to 12%, and you have maybe a $500 monthly payment,
right,
or maybe even lower. But then if you're already used to paying $1,000, just add that other $1,000, and guess what? You're paying it off even faster.
Yep.
Okay. So if you would have asked me this 3 years ago, it would have been different
because the market was
different. Rates are different. Cash out might have been the best thing to do. But we got to go with what's going to be best for the consumer at the time.
Absolutely.
And since credit card debt is at an all-time high right now, this is definitely something that you want to, start paying attention to. And if you have additional questions, reach out. Absolutely. We're happy to help with any advice that we can give you. I mean, I wish somebody would have given us this advice when we were young, 100%. Right? Yeah. But yeah, I mean, that's a great question.
Thank you, Juanita.
So happy to share that.
Absolutely.
Until next time.
We continue.